Welcome to our Utilizing Home Equity video. I am Stacy with First Commonwealth Bank, where it is our mission to improve the financial lives of our neighbors and their businesses. The equity in your home can be one of the most valuable financial assets, and in this video, we're going to discuss ways in which you can use it to meet your financial goals. Home equity is the difference between what you owe on a mortgage and the current value of your home. For example, if you own a home that is valued at $250,000 and you have a mortgage balance of $100,000, you have $150,000 of equity in your home. How much equity you can borrow depends on multiple variables, such as credit score, your appraised value, and debt-to-income ratio. Home equity can increase as property value rises and as you pay down your mortgage balance. One benefit of borrowing against the equity in your home is that interest rates are typically lower than unsecured loans. These loans also typically have low or no closing costs associated with them. However, a potential drawback is that if you cannot repay the loan, you could risk losing your home through foreclosure. A big benefit of using the equity in your home is that you can use the funds for a variety of goals: home repairs, home improvements, consolidating high-interest debt, access to emergency funds, a wedding, education, and small business startup or other costs. Depending on what your goal is, it might make more sense to get a home equity line of credit instead of a home equity loan. Let's explore the difference between those two tools. When you take out a home equity loan, you borrow a fixed amount of money for a designated period of time. You might borrow $20,000 for 5 years with a home equity loan. This might be a good option if you have a need for a set amount of money. A home equity line of credit, on the other hand, doesn't involve borrowing a set amount. Instead, you're approved to borrow up to a certain amount of money, which you can draw from over time. For example, if you're doing home improvements, and you will have an idea of how much it might cost, but you won't know exactly until the work is done. So if you're approved for a $30,000 home equity line of credit, but your improvements end up costing only $25,000, you will only draw and pay back that amount and end up not needing to pay interest on the additional $5,000. Of course, this will only be true if you don't borrow that $5,000 for something else. Some people apply for a home equity line of credit to have access to funds in case of an emergency. We never know when an unexpected financial event will happen, and it can provide peace of mind to know you have an immediate access to funds that can help you deal with a crisis. Using the equity in your home can help you reach a variety of financial goals. But is it the right option for you? We encourage you to have a conversation with a banker about your big financial picture to find out. Please know that First Commonwealth Bank is an equal housing lender, and my NMLS number is 1033243. Thank you so much for joining us today.